With so many brokerage options and trading apps out there, choosing the right one can be a daunting endeavor. That's why in this video, I'm going to give you a complete guide to help you choose the right one. So let's dive in. Hi everyone, I'm Sam. Thanks for tuning into our channel where we explore achieving wealth and financial freedom through a three-part strategy. Earn more, spend less, and invest the rest. If you like this video, we would be super grateful if you would subscribe to our channel so that you can help us grow. Today, I'm going to provide a three-part guide that I hope is going to help you in choosing an online brokerage account, aka trading platform, aka investing app that is going to best suit your needs. Investing is a very personal practice that depends on many factors which can vary from person to person. And that's why my objective for this video is to provide you with guidance and some tools so that you can be confident in making this decision for yourself. I don't just want to give you recommendations that make that decision for you. So in this video, we will start off by taking a good chunk of time to discuss matching your needs to what the platform offers. Then we are going to talk about financial considerations like fees and minimum account balances. And then we will wrap up by talking about user experience. And if you stick around till the end of the video, I will share with you the platform that Chris and I personally use, as well as one platform that we will never ever use. But before we get into it, I want to start off by saying some important disclaimers. Number one, I am not a financial advisor, and I am certainly not your financial advisor. So anything that I say in this video should not be construed as legal or financial advice. Number two, this video is not sponsored in any way. In fact, I'm pretty sure that anybody I'm going to mention in this video has no clue that I even exist. And number three, there is no one-size-fits-all platform. You should never make the decision on what platform you're going to use by copying someone else, especially YouTube ding-dongs who are very clearly sponsored by that company. If you're really serious about taking control of your financial future, the best approach is to get educated and do research so that you can feel confident in your own ability to make educated assessments and decisions about what you are going to do with your money. Education and practice lead to confidence and competence. And with those two things, you can move forward in achieving your financial goals in a way that is best for you in your personal situation. With that, let's get started with key consideration number one, meeting your needs. Ideally, you want to match your needs with what the platform offers. In order to make an informed decision about what option is going to be best for you, you have to have some basic idea of what your needs are or what they are going to be in the future. So in order to help you get started in understanding your specific needs, I have two key questions that I want you to answer. Number one, what is your level of experience with investing? And number two, what type of investing activities do you plan on doing? Or in other words, what is your personal investment strategy? To give you a practical example, I'm going to answer both of these questions myself and explore how my answers impact the way that I assess any trading platform. What is your level of experience with investing? Currently, I would consider Chris and I to be reasonably experienced investors. Of course, we always have room to grow and learn, and we're not quite at Buffett level yet. However, we have been doing this successfully for about 13 years, and on average, we usually spend around 5 to 10 hours every single week supporting our investment activities, including things like researching the companies that we want to invest in, doing valuations, options trading, and also current price monitoring. So what this means is that we're not going to feel overwhelmed by a more complicated interface of a trading platform. The vocabulary, the numbers, and the images are pretty familiar to us at this point. However, if I was to rewind and put myself back in the mindset of 22-year-old Sam who was just getting started with investing, I have a very different perspective. I remember the first time I opened our online brokerage account and I was like, what the actual fuzz is all of this? It was very overwhelming. Now, eventually I did get over it by learning with lots of help from Chris, who numbers come very easily to and who took very naturally to investing. But without this determination to take control of my financial future and all of the support from Chris, I could have easily given up on investing altogether because it was so overwhelming at first. I also spent a lot of time trading in paper money, or in other words, a trading simulation. And by doing this, I was able to build up my confidence without risking losing all of our money by clicking the wrong button. The underlying message here is that you need to take into consideration your level of comfort and experience when choosing an online trading platform. You can always upgrade to something that is more sophisticated as you become more knowledgeable and confident in your own investing practice. The hardest part is actually getting started, so you don't want to choose an option that is overly complex or that is going to scare you away from investing. And if you're a beginner, I would strongly recommend choosing an option that has some sort of a trading simulation feature that you can use while you are learning and building up your confidence. The logos you see around me here are all brokerages that have simulation features. All right, back to question number 2 when you're evaluating your needs. What type of investing do you plan to do? Or in other words, what is your personal investment strategy? Chris and I practice a strategy called value investing. What this means is that we have a long-term outlook, we carefully select the companies that we invest in, and we do extensive research into these companies before we buy any shares. We take a quality over quantity approach when it comes to our portfolio, and we never day trade. We also use tools like options in a very specific way in order to help us lower our cost basis for long-term investments. This means that when we are looking at online brokerages, we are looking for features that are simple and clear. We don't want to see a bunch of pop-ups invading our screen whenever we log in. And we're looking for some specific tools like options chains that are easy to navigate. If you want to see a detailed example of how we have used options to lower our cost basis, check out our AT&T video, which I will link in the description below. Please do not be fooled into thinking that commission-free means actually free. Brokerages are businesses and they need to be profitable in order to survive. Online trading platforms typically make money in 2 ways. 1, commissions and fees, and 2, payment for order flow. Fees and commissions are charged to execute transactions and provide specialized services that facilitate trading or administer investment. Side note, the primary function of an online brokerage is to facilitate investors like us to make online trades. This means that the customer service is typically lower than what you would see at what's known as a full-service brokerage. These are the types of organizations that manage your money and essentially make decisions for you about what is done with your money. And in most cases, these guys take a commission from you, whether you make money or not. The fees and commissions charged by an online platform are typically seen in 2 forms: set rates and percentages. Some practical examples include annual account maintenance fees, which normally vary between $0 to $50 per account, and trading fees, which vary based on a per contract or per share charge, and depending on the broker, can be either percentages or set fees. Due to high competition in the market, many brokerages have removed specific commission fees related to buying stock shares. This is what allows them to use the tagline commission-free trading. But remember, they have to make money somehow. This brings me back to payment for order flow, PFOF. It's the compensation a brokerage firm receives for directing orders to different parties for trade execution. Payment for order flow is mostly associated with options transaction and averages less than about 50 cents per contract traded. It's a method of transferring some of the trading profits from market making to the brokers that route customer orders to a specialist for execution. If that last section confused you a little bit, don't worry. If you're a beginner or if you are an investor who is trading infrequently or in smaller quantities, you don't really have to worry too much about this. But if you're trading frequently or in large quantities, it's really important that you understand this concept. This is a bit more of an advanced topic, but if you guys would like me to do a detailed video on this concept in the future, just let me know in the comments. All right, circling back to the beginning, now you can see why I started off with those two questions asking you what type of trading you were going to be doing and what your personal investment strategy was. Because as you can see, the types of trades that you are going to be doing has a huge impact on the amount of fees or commissions that you are going to pay to your brokerage firm. Finally, I would like to point out that some platforms have minimum account balances while others do not. In the case that there is a minimum account balance, it usually ranges from between $500 to $1,000. So depending on how much money you want to keep in your account, this can have an impact on which option you choose. Bottom line, make sure you read the fine print and that you understand all of the financial implications that you are committing to with whatever investing platform you choose. Okay, let's move on to key consideration number 3, user experience. As I had mentioned earlier in the video, it's important that you find a platform that you feel comfortable using on a regular basis. As you are shopping around, check out the different platforms. Do you like it at first sight? If the answer is no, then move on and look at other options. Navigation and buttons should be easily understandable for you at first sight, so if they're not, keep looking. Aside from design and navigation, you want to consider how you are going to access the platform. Do you prefer using your phone or using a computer? Personally, we like to access our brokerage account via our laptops. Don't get me wrong, I like having an app to check my account balance and do simple things like that, but I will never execute a trade on my phone. You can call me old-fashioned, or maybe it's just that I'm scared I'm going to press the wrong button because I have sausage fingers, but either way, using a computer makes me and Chris feel more comfortable. This means that when we are choosing a platform, we don't really care too much about the mobile experience and instead really focus on the experience that we will have using it from a desktop. Another factor of user experience is performance stability. And typically, there are 3 ways that you can access a platform. Desktop-based, with an app that you can download to your computer. Web-based, accessing it online via the internet, or through a mobile app, which is essentially using the trading platform on your smartphone. So depending on the RAM and the processing power of your computer, as well as the reliability of your internet access, you may need to take careful consideration to ensure that the platform you choose matches your device and doesn't exceed your bandwidth limitations. The last thing that you want is to be in the middle of executing a trade and your computer freezes. You should also take into account where you physically live and where you plan to access the platform from. There are quite a few brokerages that actually require a US address in order to open up an account, and there are a few that will block IP addresses that are coming from outside of America. Finally, when it comes to user experience, you should consider the quality of the user support that the company offers. Personally, for me, it is really important that there are lots of tutorials, both video and written, that I can access in order to help me learn how to use the platform. I'm also a big fan of an education center that can help me while I'm doing my research about the companies that I want to invest in. And as always, I want this to be easy to navigate so that I can quickly find the information that I'm looking for. And while I'm not really interested in getting actual advice on the investing or the trades that I'm making, I do want to make sure that there is sufficient IT support so that I know if anything bad happens technically with the trading platform itself, I have somebody that I can go to who's going to help me solve that problem. In summary, don't neglect user experience when you are making your choice about your online trading platform. While I don't think it is as important as matching your needs to what the platform offers, nor lowering your fees as much as possible, it is still a worthwhile consideration. All right, I know I have just hit you with a lot of information, and the idea of comparing a whole bunch of different online platforms with this level of detail may seem daunting, but don't worry, there are actually lots of websites that can help you do comparisons of different platforms and make things a little bit easier for you. Now, with any of these comparison type websites, there are red flags that you need to look for. Namely, you need to be aware of any commercial connections that are going to bias the results that you get from the website. And also sometimes these websites can have out-of-date information. So it's really important that if you're going to use these comparison type websites, that you validate your results by doing some of your own additional research to make sure that everything you're seeing is correct. So basically, don't just blindly trust whatever the website tells you. One website that I would recommend is stockbrokers.com. So you can see on my screen that it has an easy to use comparison feature that lets you take a high level look at some of the most well-known brokerages 5 at a time. Alright guys, we are nearing the end of this video, and as promised, I am going to tell you one of the brokerages that Chris and I personally use, as well as one that we will never use. The platform we use most frequently is TD Ameritrade. So we've been using them for over 10 years. The thing I like best is how robust their educational resources are, especially Think or Swim. Love it. And on top of that, the fee structure works for us because it aligns pretty nicely with our personal investment strategy. The platform that we would never use is Robinhood. So I actually have a lot of issues with Robinhood, and I could probably make a whole separate video with me just going on a rant about all the things that I don't like. But for the sake of time, I want to summarize my disdain with one keyword, and that is irresponsible. I think that Robinhood is irresponsible because I think that they have intentionally designed their platform to be gamified in a way that exploits new investors and young people. So let me illustrate this idea for you with a metaphor. So imagine you are buying an airplane ticket online. You know how when you get to the end screen, you get that little flutter of anxiety because you know you are about to spend a lot of money. So you go back and you triple check everything before you hit that final button that submits your payment. On the other hand, imagine that you are on your phone and you are playing some sort of a game like Candy Crush, and you finish a level and then you get super excited because you have just unlocked some treasure chest full of gold, or you have now accessed a part of the game that you couldn't access before, like a new level. Between these two scenarios, which do you think is more appropriate for investing your money? For me, the answer is clear. Investing is not a game. There are serious long-term consequences to every choice you make with your investment portfolio. We aren't dealing with fake gems on a phone screen. We are talking literally about people's life savings. And personally, I just cannot get down with the company that uses the same kind of design techniques that are used by online gambling companies, who numerous studies have shown have negative neurological and psychological effects on their users. Okay, I'm going to get off my soapbox now, and let's wrap up with key takeaways. Access to financial markets is now easy and inexpensive thanks to a variety of brokers that operate through online platforms. Different online brokers are optimized for different types of clients, from long-term buy and hold novices to active and sophisticated traders. Choosing the right online brokerage requires some due diligence in order to get the most for your money. 3 considerations include matching your needs with what the platform offers, financial considerations, and user experience. And finally, don't copy someone else. Don't choose a platform only because it is recommended by others. Always do your own due diligence and base your decision on your personal needs. That's it for me. Thank you so much for watching. I hope that you enjoyed this video and found it useful. If you did, let us know by hitting that like button, or better yet, subscribing to our channel. We would love to connect with you in the comments or on our Facebook group. Remember, earn more, spend less, and invest the rest. We'll see you next time.